Welcome to Middle Class Matters. Business News in English from Dr. CMA ALAGESAN. Hindenburg Research Report on Adani. Stock Manipulation and Accounting Fraud. Report is read in full. Part number 12. A lawyer for India's Central Bureau of Investigation was quoted in another media report as opposing one of several travel permits to London, saying the Parekh's frequent trips to London are being used to manage millions of ill-gotten wealth stashed in a bank there. Ketan Parekh has been arrested multiple times since the 2001 market crash. He helped spark, but each time has made bail, including in 2001, 2008, 2014 and 2018. In February 2022, prominent Indian investigating journalist Suchita Dalal hinted at a new alliance between the Adani Group and the known market manipulators like Ketan Parekh and his associates in a tweet. Suchita Dalal: does Finance Ministry and SEBI check the brazen ramping of one particular group stocks, or are we sleeping? How come richest and second richest never sequel against one another? A former scamster operating from London having a bail. We talk about investigation and governance. The above referenced broker was banned from trading on Indian markets for stock manipulation via Mauritius-based funds, said he knew Ketan Parekh personally, adding, Ketan Parekh never stopped working in India. His brother-in-law lives here. Ketan Parekh, has a full setup in London. He has a full setup in Singapore. He has a very good link in Switzerland. He has absolutely full trust actually in Mumbai. And he is doing what he was doing. Still continues in the same fashion, and his business has continued. SEBI knows about it. All the politicians know about it. Even people and corporations go to him for their businesses, and he is playing his role. It is well documented that the Adani Group was one of the Parekh's high-profile clients. We pressed our source on whether he believed that relationship was current. Yes, none of them have broken relationships with him. Ketan Parekh is a market maker, was a market maker, and still is a market maker. All the previous clients are still loyal to Ketan and are still working with Ketan. The London hub market riggers from the notorious 1999 to 2001 scam continued doing business with Vinod Adani and a former Adani company executive. After Ketan Parekh and related brokers were sanctioned for their role in market rigging between 1999 and 2001, one may have expected Adani Group promoters to distance themselves. What we found, though a review of corporate records and media reports, is that the relationship seems to have simply continued while masked through different offshore entities. In 2007, an Economic Times article focused on transactions between Jerome Capital, a brokerage linked to market riggers, and various offshore entities in 2007. The article describes a transaction which involved a brokerage at the time controlled by a Ketan Parekh associate, buying shares in a pharmaceutical company for a B4 company called Jineshwar Holdings. The article did not mention this, but Vinod Adani served as shareholder and director of Jineshwar Holdings, as per the records. That Vinod Adani company received a payment of $1 million as part of the transaction. according to the Economic Times. Following this scandal, the same Ketan Parekh associated brokerage firm was renamed Orbit Investment Securities as per UK corporate records. It is now controlled by an individual called Jai Chand J.E. Jingri, who previously served as a director of Adani Global Limited based in Mauritius, according to BSE records. Orbit Investment Securities Services Limited, Mauritius, ownership 75% of the shares. Part 3, Adani Group Corporate Maze. How the group surreptitiously funnels money in and out of its empire through related party transactions and offshore entities. Aside from using offshore capital to park stock, the Adani Group also seems to have a system for laundering the money onshore directly onto the Adani listed companies' balance sheets. Through our multi-year research into the Adani Group and its corporate structure, we have uncovered a pattern whereby capital is moved from offshore entities to private Indian companies within the Adani empire, often through undisclosed related party transactions in apparent violation of the law, then transferred from there to listed companies. At that point, the capital can be used to engineer Adani's accounting, whether by bolstering its reported profit or cash flows or cushioning its capital balances in order to make listed entities appear more solvent or creditworthy. If needed elsewhere, it can be siphoned back out again through a similar maze of related party transactions. Essentially, it seems capital is simply moved where needed, a perpetual juggling act, propping up the entire empire through both stock parking and direct capital infusions. Adani's key 7 publicly listed entities have 578 subsidiaries and engaged in 6,025 disclosed related party transactions in financial year 2022 alone. Use of complicated group structures and complex related party transactions increase the concern on siphoning of funds, money laundering, round tripping, etc. While such structures and transactions happen at a cross-country level, the lack of free information flow hinders monitoring and enforcement as well. Former SEBI chairman Ajay Tyagi, speaking about issues affecting the Indian stock market, investors generally prefer clean and simple corporate structures to avoid conflict of interest and accounting discrepancies that can lurk in sprawling, convoluted structures. The Adani Group has chosen sprawling, convoluted structures for most of its listed companies. Adani's key 7 listed companies have a total of 578 subsidiaries, some of which are incorporated in notoriously opaque jurisdictions including Mauritius, Panama, and the UAE, according to the annual reports of the conglomerate. The key 7 listed entities collectively engaged in a staggering total of 6,025 separate related party transactions in financial year 2022 alone, as per BSE disclosures. Many Adani private entities are structured through offshore private trust with similarly complicated structures. Amidst this vast maze of related party dealings, we have shined the spotlight on several questionable transactions, some of which were not disclosed as related party transactions, to highlight undisclosed issues lurking in the structure. Suspicious money in Adani Group has funded some of its listed companies with massive amounts of money from shell entities. Vinod Adani, Gautam's brother, runs an intricate network of offshore entities that extensively deals with Adani Group. He has a history of fraud allegations from regulators involving his dealings with Adani companies. Yeah, briefly mentioned earlier, Indian media describes Vinod Adani as a shadowy figure with a nebulous role in Adani empire. Vinod and Adani offshore entities he controls have played a central role in Adani Group company scandals, including an INR 6.8 billion, US dollar 151 million diamond trading scandal and an INR 39.74 billion, US dollar 800 million at the time power generation over invoicing scandal. The government investigations into those scandals alleged that Vinod Adani's offshore entities were involved in sham transactions and inappropriately received payments from listed companies of Adani Group, for which there was little or zero public disclosure at that time. This is completion of part 12. Part 13 will continue. Please like the video, subscribe to the channel, give your comments. Thanks for watching.